Many people think that if you are on a work visa and not got your permanent settlement, you cannot buy a property in the UK, which is a myth. In fact, there are a lot of myths around it. So today I have got someone special and an expert, Ripley from First Time Finance, who's going to talk about all the details about how you can buy a property in the UK on a work visa. So if this topic is of any use to you, make sure you stick with me till the end of this video. So without any further delay, let me introduce you guys to Ripley. Hey Ripley, welcome to Your Knowledge Buddy. And if you don't mind, can you please introduce yourself to my audience, please?
Hi, Sarika. Yeah, thanks for having me. My name is Ripley Salguero. So I'm the founder and the CEO of First Time Finance. We are a mortgage broker that is specifically there to help people that have moved over to the UK. So the majority of our clients are here on visas.
Okay, thank you very much. So today's topic, I have you as an expert. So I wanted to discuss about how can someone buy a home in the UK who are on a work visa, someone who don't have a British passport, someone who don't have an ILR. So we're going to touch upon it. And for that topic, I prepared some questions for you. And if you don't mind, I'll go through it one by one with you.
Yeah, of course.
Okay, so I'll start with the basic question. I'm not going to make it very tough for my audience to understand. So, many people I interact with, they all think on work visa, they're not allowed to buy a property in the UK. So, can you clarify, can visa holders legally buy a home in the UK?
Yes. So that question's quite easy to answer. Yeah, 100%. It's legally possible to buy a home in the UK. We've helped hundreds of people to do it. I understand why that's a misconception. And there's a lot of conflicting information online as well. So if you did believe that, don't blame yourself for believing the wrong thing. It's quite a confusing topic, but yes, yeah, it is possible.
I remember I was also confused when I was on a work visa. I didn't know for a couple of good years, I didn't know that I
Yeah.
can buy a property. But yes, I know that confusion is still there with the crowd who are on visa thing. Now, because you deal with many immigrants and you help them with mortgage and help them buy property. So if buying is allowed, like you said, on visa, where do most challenges actually arise from what you have seen? The purchase itself or getting a mortgage?
Yeah, this is a really good question. I almost have to come at it from two angles because I do think both. I think both, but for different reasons. So for the mortgage, for example, it is the visa itself that does cause some problems. Um, you can cause yourself more issues if you were to approach the bank yourself or work with a broker that maybe just doesn't quite understand visa applications just as well. So I think that's an important thing to consider, and hence why we started First Time Finance because we found that people weren't getting the right support and guidance through that process. They were getting mortgages that were too expensive. They should have been able to get a cheaper mortgage, but it's that lack of knowledge from I guess some brokers and also banks as well. So you can kind of cause your own issues if you do it that way for the mortgage. But with regard to actually buying the property itself, I think it's more the case of it's an entirely different process, right? So if you've moved over to the UK, it's not a process you would know or understand. I mean, for any first-time buyer, really, it's an incredibly difficult process, regardless of whether you're born here or not. So I think from that angle, it can be difficult to go through the process. Again, that's why we designed our service, not just to get someone a mortgage, but to guide people step by step as well.
Correct. Yes. Thank you. So, Ripley, on a high level, what are the basic mortgage eligibility requirements for someone on a work visa, like on a basic?
Yeah, I mean, I always summarize this with what I call the four key requirements. And whenever I do a webinar or talk to people, I'm always talking about these four key requirements. And these are firstly, your residency status.
Hmm.
That is speaking about how long you've lived in the UK, what type of visa you're on, and how long is remaining on the visa itself. The second requirement is your deposit. So that is how much money that you can put as a down payment towards the purchase price of the property. The third requirement is your income. So that could be yourself and your partner who would both apply for the mortgage together. Um, Ideally, that just needs to be kind of earning a stable income from a job in the UK. And the fourth requirement is your credit profile. That doesn't have to be perfect. I know that's a really important topic that people like to understand. It doesn't have to be perfect, but it does help a lot if you have a good credit score and no missed payments.
Yeah. So, the different kind of ratings are good, Excellent, poor, something like that, right?
Yeah, it varies from. This is where it becomes even more confusing because you've got Experian, Equifax, TransUnion, all these credit reference agencies, and they will all have different scores. So some range up to, so from 0 to 750 points, some go up to 999, and then some will say fair, excellent, very good. It all becomes a bit confusing.
Okay. From my personal journey, I just remember my score wasn't excellent. It was good at that time.
Yeah,
So I remember I had to, it's a long, long time ago, I had to pay 25% deposit instead of 10% deposit. So
wow.
that point you mentioned about the credit score is very important because that also decides how much percentage of initial deposit maybe you will have to give, right, Ripley?
Definitely, yeah, and it can be the differentiating factor between being able to go to a cheaper lender and not as well.
Yeah.
So it might not just be the case that suddenly you have to use a much larger deposit. It might be okay, we can still use a 10% deposit, but the lender that we're able to go to might charge a higher interest rate. Um, so that
Yeah.
can be a problem as well. Yeah.
Yeah. Okay. From your experience and the knowledge that you have, what do you see? Like, do lenders require a minimum period of UK residency or employment before considering an application?
Yes, so there's a couple of points to mention on this. So one is how long you've lived in the UK, which is kind of the question, right? Another though would be the length of time remaining on your visa, which is another time period that's important. And then of course also the income duration or the time that you've been employed. So I'll speak about the visa duration. Most lenders will require between 6 to 12 months remaining on your visa to allow you to get a mortgage, although some can accept as little as 2 to 3 months.
Okay.
So there is a real range, yeah. In terms of how long someone's lived in the UK and what's acceptable, again, there's a real range here. Some as little as 6 months living in the UK. Some lenders have no minimums, for example. But a lot will say, right, you need to have lived in the UK for at least 1 year or 2 years. So the 3 year rule that I hear people talk about a lot just isn't really true. There's not many lenders that actually have a 3 year requirement. It's more 1 year, 2 years than three. When it
Okay.
comes to income, you could, to be honest, only need to be in a job for normally 1 to 3 months in order for us to use that income. As long as it's a permanent employed job, it's 1 to 3 months most of the time.
Okay. I thought at least minimum 3 months of bank statement or your salary slip would be needed, right?
Can be helpful, but not always a
Mhm.
requirement. So it depends on the lender.
Nice. Things have changed in a positive way, to be honest.
Yeah,
Yeah.
what definitely. I think what happened. I mean, this is a bit of context, and without going into too much detail, but there
Yeah.
were issues with mortgages many years ago with the credit
Yeah.
crunch and everything that happened, and they tightened the rules really, really strict. And I think over time they have relaxed those a bit and lowered the deposit requirements and opened those up. And I'm speaking about mortgages for anyone, by the way, now, not just specifically to visa holders, but these have opened up a bit. So I think in your experience, you would have seen how much that's changed
Yeah.
initially getting a mortgage versus now, right?
Yeah. 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 Exactly. I'm going to ask you a stupid question. Maybe I don't know if there's any difference or not, but do you know like which work visa types are generally accepted by UK lenders? Or is it like all the visa types, or they're specific they prefer and they don't prefer the other kind of visa types?
Yeah, interesting question because some lenders do have preferences. A
Ah,
lot of them, a lot of them don't. So a lot of them will say, okay, if it's a visa and it allows you to work in the UK, so that would even include graduate visas. For some lenders, it even includes student visas, although of course there's then some restrictions in terms of the amount of time that you can be working. But for a lot of lenders, I would say skilled worker visa, health and social care visa, so the tier two bracket, global talent visa, and graduate visa quite commonly are fine. You can go outside of that, and there are others like the innovator visa, etc., that can be acceptable to lenders as well.
okay. Oh, good to know. Um, Ripley, in terms of deposit, we touched upon it now. However, what I had seen again from my knowledge, that deposit varies whether you are a British versus you are an immigrant who don't have a permanent settlement. So, what deposit should visa holders realistically expect to need, and why is it often higher than for as compared to people who are not UK citizen? Because I've seen for immigrants it's higher as compared to UK citizens.
Yeah, I think some of that is true, but I do think a lot of it is a misconception as well, by the
Okay.
way. So I think if you look online, for example, quite commonly it will tell you you need a 25% deposit if you're on a visa, which is something I've been speaking about for a very long time, saying that's completely false most of the time.
Hmm.
Um, it is possible when you're on a visa to get a mortgage with as little as 5% deposit.
Hmm.
Um, there are about, I'd say, five or six lenders in the market at the moment, which might sound like a small selection versus there are probably hundreds of lenders, but it's fine. You only need one lender to get a mortgage, right? And some have fairly cheap interest rates. 10% is much better. So if you use a 10% deposit, you will get better interest rates. So that can be a good target to meet. There's an interesting change that's happened though within the last 6 months or so, really, or even sooner than that, or even more recently. There is a lender now that can accept a 0% deposit for visa holders. Hold up, but it is only possible through shared ownership. So there is a restriction in there. They only allow that with shared ownership properties. So it's not suitable for everyone, but it is the first time that I've seen any lender do a 0% deposit that's available for visa holders. So I found that very, very interesting, actually.
Okay, so on that point, I'm going to ask you questions more different to the simple scenario.
Sure.
So say there are many immigrants here who got distant family members, say uncles, aunts, or maybe cousins or someone. So are joint mortgages with a UK citizen, say they are a UK citizen, their relatives also.
Yeah.
So are joint mortgages with UK citizens or settled partner easier for visa holders? And what should be people be careful about?
Yeah. They're a little bit easier. I'll put it that way. So there are more lenders available if one applicant is either British or has ILR, so as kind of settled status. Um, it doesn't make a huge amount of difference, though, to be honest. It just gives us access to a couple more lenders.
Okay.
Um, other than that, there's nothing else I'd say in particular to be careful about. It's very similar to the points that I've mentioned in terms of eligibility, with the four key requirements that I mentioned earlier.
Thank you, Ripley. So I want to touch upon what you said now, shared ownership schemes, right? Are
Yeah.
they good option for visa holders or do they come with their own extra challenges that we don't know?
Yeah, I've thought this is something I've thought about a lot in the past because I get asked this quite commonly, and I think sometimes I can look at shared ownership schemes and think that they're not great because you're paying rent and mortgage and service charge, and there's all these costs that come into it. I do think, however, they can be a good option if you cannot afford the size of property that you need in the area that you live or need to stay in. So, for example, if you are a family of five and you need a house with a certain amount of bedrooms, but in the area that you're living in and working in and the kids are going to school in, you just can't afford anything more than a two-bedroom flat, for example. So London's a great example. In that instance, you might be able to afford a property that's big enough through shared ownership because it does help the affordability. So I think in that instance, it can be a good thing. I think it's just important that we look at all the options and make sure that we're making the right decision long term.
Okay, great. Good to know. Thanks, Ripley. Now, I'm just thinking about something like there are major
Yeah.
changes which is being announced in the UK in terms of immigration. ILR
Yeah.
rules are changing, salary thresholds are increasing. Now, more and more, say, licensed sponsors are not willing to sponsor people's visa or renew the visa. So, say what happens if someone buys a property and later their visa is not renewed, say for some reason? What happens then?
Yeah, I mean, most of the time they'll just be able to keep the property. So I think some people think, okay, if I was to unfortunately have to leave the country, let's say, in the most extreme example, I think people think, right, okay, well, the property would just disappear or I'd lose ownership, which wouldn't be the case at all. It's still your property. We have clients that have decided to leave the UK at some point, so maybe bought a property many years ago and then they've decided to leave the country, and now we're servicing their mortgage whilst they live outside of the UK. So it is very possible to keep the property and keep a mortgage whilst you're not in the UK. What most lenders allow people to do is get what's called consent to let for a period of time.
Yeah.
And that means if you had to leave the UK, and sometimes it's not even if you had to, if you decided to leave the UK and you then a lender, your current mortgage lender, could allow you to get consent to let, where they allow you to
Yeah.
rent the property out, and then you could just keep it and rent it.
Yeah. And if they want to come back or they make a decision to sell, they can do that later as well, right?
Exactly.
Yeah.
Of course, if they wanted to sell it, they needed the money to go buy a property somewhere else. They could sell the property 100%.
Okay. All right. So let's talk about some preparation for the immigrants who want to buy a property.
Yeah.
So, what should immigrants start doing, say, for the next 12 to 24 months before they plan to buy a property? What do you say?
Yeah. So I think if we think back to what I was saying about the four key requirements, I think is the best frame to think about this in your mind because those are the four real points that are very important. I think there's two of those that you can have quite a lot of control over. So the first is the deposit.
Mm.
It's very important to have a clean source of deposit, right? What do I mean by clean source of deposit? What I mean is, it makes it very difficult if you have lots of transactions coming in and out of your account, particularly from other people. The solicitor will want to verify where the deposit money has come from, normally looking at least 6 months bank statements to do so. So if you have a lot of transactions coming in and out, it makes it very difficult. You could be at risk of the solicitor saying, I'm not signing off your deposit. In that case, you either can't buy the property or you'd have to find another solicitor that's happy with it. So just be very careful around that. It's much easier if the deposit is built up through your own savings from money through work, or if it's a gift from a direct family member, for example. Um, Money can come from abroad, that is fine. But again, it's important for us to be careful about the source and how that's being transferred, which is something, of course, we would guide our clients through. Um, it's much easier, again, if you have a 10% deposit, I would say, than a 5% deposit. That's not me saying to whoever's watching at home today, definitely save up to 10% and forget using a 5%. It depends on the person, but it can make it easier. So that's important. And then I would say the second one would be credit profile. So I'd be very careful around your credit profile. As you said, it's kind of 12 to 24 months up until when you get a mortgage. To be honest, the whole time you're in the UK, it does matter. Be careful that you're not missing any payments. I would say something we see quite commonly is when people are moving home. So you might change where you're renting, for example, and then the utility bills might not transfer correctly. And people get into arguments with their utility bill providers, thinking that, oh, no, no, I've done the right thing. And you might have, and a lot of the time you have, but the utility bill provider won't cancel it down and then they mark missed payments. And until you raise a complaint and they take that off your profile, it shows as missed payments and it can cause issues. So I'd just say be very careful. If you find yourself in that situation, I would say keep paying the utility bill, don't stop paying it, and hope that with a complaint you would be able to resolve that whilst not getting any kind of missed payments. So be very careful about your credit profile, be very careful about how you're building up the deposit. I think those are the two main things that can catch people out.
That's a nice advice, actually, for people. Yeah. Another question for you. So, like I'm a career coach. When people reach out to me, their
Yeah.
visas left, say, only for 3 months. And I say, it's too late now to help you because, whatever advice I'm going to give you, it will take some time, 6 to 12 months, the preparation time. So, in your case, so how important is it to speak to a mortgage advisor early, especially for visa holders?
Yeah, I think it's important to get an understanding of what your options might be, and how long realistically it will take to get to the point that you can buy. For example, if someone reaches out to us at First Time Finance, one of the team will have a conversation with them, even at a very early stage, just to explain some of these concepts that I'm speaking to you about. The four key requirements, and okay, how much deposit have you currently got? How much can you save per month? And just work through all of this with you to then decide, okay, when is it likely to be that you could buy a property here in the UK? So as early as you're thinking about buying a property is the only real answer there. We could have a discussion and see when it might be possible for you. If you're watching this and you're thinking, well, actually, I've got a valid visa, I work in the UK, I've got a 5% or 10% deposit saved up, I think my credit score is quite good, and you want to buy a property, then it might be a case where you actually could go ahead now if you wanted to. So yeah, worth reaching out, I would say.
Okay, great. Thank you, Ripley. So we discussed lots of questions today, and I hope this will be useful for my audience who are willing or at least planning to buy a property in 2026 because we are almost there. However, just the last question from my side.
Sure.
If you could give one piece of advice to someone on a work visa who wants to buy a home in the UK in 2026, what would it be?
I think I sound like a broken record when I answer this question. I've been asked this by someone else, but I always say just know that it's possible. That's one key takeaway I'd love people to have today is just know that it's possible. If it's something you want to do, regardless of immigration changes and things like that, just know that it is possible. There are good options. You're not necessarily going to pay a large interest rate or a massive deposit, and that there's a team sat here waiting at First Time Finance to support you through the process.
Great. Thank you. On that note, thank you very much, Ripley, for coming and recording this video. And I hope this is useful for all my audience. Thank you and all the best. See you soon.